Okay, and for this evening, so big thank you to all of our volunteers for coming to be part of the panel. This is the fourth consecutive panel we've held in January over the last couple of years, and it's been an astounding success. Always really engaging, interesting dialogue between our panelists on a bunch of ranging subjects that are of particular interest to the Sudbury Basin. A lot of our attendees are from, and tonight's no exception. So a lot of people in Sudbury are hearing the news about some of the lower grade nickel deposits occurring outside of the basin. And so we have some particular experts that can speak on this subject and really where these projects are poised to fuel the world. So without further ado, I'm going to introduce our moderator, who will then kick us off and introduce some of the panelists. So Adrian Pocobelli is an editor and artist based out of Berlin, Germany. So he is joining us, what is it, 9:30 at night now, at least?
10:38.
10:38. So yeah, thank you, Adrian, for helping out at an interesting time zone for us. Yeah. So Adrian has been working with the Northern Miner since 2012. He also has just started a solo art show at the Gallery Fata Morgana in Berlin's Mite District. Originally hailing from Saskatoon, Saskatchewan, and first became interested in junior mining after subscribed to the Dines Letter. Currently hosts the Northern Miner podcast, which is a weekly podcast on the mining industry. And that can be found on more information about him on pocobelli.net, as well as the Northern Miner website with an archive of all his podcasts related to junior mining and the mining industry. So welcome, Adrian. Thank you for being a moderator for this event, and I'll let you take it away.
Great, thank you, Colin. And it's an honor to be asked to do this this event. I've never been asked to do this kind of moderation for something, CIM Sudbury, but it's a very interesting issue. I think this whole George Salamis was on a recent podcast and he talked about resource sovereignty and this idea of sort of Canada taking a bit more, for lack of a better word, aggressive of an approach with how it deals with its resources and growing kind of a homegrown solution, because we have a lot of what the world needs. And so he saw a huge opportunity, and I see a huge opportunity here. So I'm excited to take part in this. Again, it's an issue close to my heart. So I'm going to introduce everybody here. And so joining us tonight, we have four people. Jonna Muinonen, who is president of Dumont Nickel and Magneto Investments. And we have Mark Selby, chairman, CEO, and director of Canada Nickel Company. And we have Roberta Pedler-Hobbs, who is a partner with ERM, which stands for Environmental Resources Management. And we also have Wes Carson, who is vice president, mining operations for Wheaton Precious Metals. So we have a great group of people here, and there's a great opportunity here, and there's some complexity to this issue. So we're going to try and parse it out and make it as simple and as clear as possible for everybody. But there seems to be a big opportunity with these low-grade nickel deposits that are, and again, the name of this panel is Development of Low-Grade Nickel Deposits in the Battery Electric Age. So, Jonna, would you like to start us out? And how do you see this opportunity? What's going on? Help us out. Why should we care about this?
Hi, everybody. My name's Jonna Muinonen. I currently work for Dumont Nickel. I've been with the Dumont Nickel project since 2010. And before that, I was with Vale Inco. I spent most of my time up in Thompson, Manitoba, but also worked down in Toronto, both at the research lab and in the business development group. I currently live in Sudbury, so I'm local, and just wanted to say hello to everybody. I see a few very familiar names on the ticker there before we started. In terms of why I think we should think about this is there's going to be a lot of nickel coming, demand coming. Right now, for all new nickel, 70% of all new nickel goes into stainless steel, and batteries represent about 3% of the nickel market. However, if you look at the future predictions about where electric vehicles will be in 2025 and 2030, that is increasing exponentially to the point where if you look at just Tesla alone and what they said they're going to achieve by 2030, they could need another million and a half tons of nickel per year. And that is, equivalent to 75% of today's production. So, that's why I think we should care. I think we should be interested in what that means to us as nickel producers, nickel developers in both the Sudbury Basin and elsewhere in Canada.
Excellent, thank you. And Mark Selby, would you like to do the same thing and introduce yourself first and tell us why this is an important issue and sort of, yeah, however you want to take it.
Okay, sure. Mark Selby, Chair and CEO of Canada Nickel, with the Crawford discovery just north of Timmins. No, I mean, building on Jonna's comments, I think that Tesla Battery Day announcement and the fact that when you translate that into nickel use, you're looking for 1 million, 1.5 million tons per year. The last high-grade nickel sulfide discovery, when most people, when they think of nickel, they think of multi-percent nickel deposits, but the last 1 million ton high-grade nickel sulfide discovery was Voisey's Bay in 1992. So it's been 28 years since we found a deposit big enough to meet just 1 year worth of Tesla's nickel consumption. So if we as an industry are going to hope to be able to meet the demand not only from Tesla, but the entire EV sector and the requirements, which are, again, are happening in Elon Musk time, not in mining company time, we're going to squander a massive opportunity here. So when you step back and say, okay, how can I deliver large volumes of material and be able to ramp up that volume to keep pace with an industry that's going at a very large clip? You're not going to be doing that from underground deposits that are 4,000 feet underground. It has to be open pittable deposits, and the open pittable deposits that are available today are large low grade deposits. And so the timing I think couldn't be better. The source of nickel other than laterites in Indonesia, because again, the entire Western auto industry is not going to depend their entire business on Chinese controlled parts of Indonesia delivering the nickel they need. Really low grade sulfide deposits fill a massive gap in the market, and I think the timing for them is going to be very well suited.
Excellent, thank you. And Roberta, could you chime in and introduce yourself and tell us how the view from your perch and on this whole issue. I assume you've thought about the nickel issue and in Sudbury, and tell us how you see things.
Sure. So Roberta, I'm with ERM. We're a global private sustainability consultancy. Basically, our whole business is sustainability, and we help leading companies shape a sustainable future. So whether that be from environmental, social, governance aspects, and we work across sectors. So mining is my sector, my focus. I spent my career in mining. I am based in Sudbury. I live in Espanola, though, so most people on this call probably know where that is. I've spent my career working both for industry directly, as well as I worked for the Ministry of Northern Development and Mines for a few years as a mine rehabilitation specialist, and then I decided to join ERM about 4 years ago. So, and one of the reasons really is because of the focus and the growing need to develop projects sustainably, not just because it's a thing to do. I think people, slowly over time have begun to recognize that the environmental aspects of their projects are important. But now I think it's really this increasing demand to develop projects that encompass the social needs and the economic needs of the region. So I see these nickel deposits as an opportunity really for Ontario, for Quebec, and for Canada really to get ahead and to really create shared value from these deposits. But that will really be up to the two companies we have on the panel here to decide, right, that sustainability is important to them, and do they want to differentiate themselves that way. So those are my thoughts for now.
Okay, thank you. That was excellent. And Wes, you're with Wheaton Precious Metals. What's the nickel opportunity? And I think you might be on mute.
Yeah.
Yeah, sure. So I'm Wes Carson, Vice President of Mining Operations with Wheaton Precious Metals. So I've been with Wheaton for about 4 years now. Prior to that, did kind of 20 years in the kind of operations or project development side of the business, kind of both with big companies and small companies. And for those of you that don't know, Wheaton is really kind of a mine finance company. We're about a $30 billion market cap company with 40 employees, which is kind of an interesting model overall. So it seems to work fairly well. But really, I would say the focus on nickel for us is really in the byproducts and how we can actually help companies move some of these projects forward. And really, if you look at streaming as an alternative form of financing, it doesn't have the dilutive factors that you have in equity or the kind of the constraints that you get with debt covenants and that around it. So and really what we try to do as a company is really partner with companies that are developing projects or operating projects in order to actually make them better. And really we get a higher value for the precious metals than a nickel company would be able to get themselves. So we can actually afford to add value to the project in that way. We also do a lot of things to focus on sustainability. We have quite a large CSR fund that we deploy every year. Vale is our largest partner. They make up almost 40% of the revenue that we take in, a large part of that from their Selby mine down in Brazil. But we also are partnered on all of the Vale mines in the Sudbury Basin, as well as Voisey's Bay, which is an interesting one because that one's actually a cobalt stream. So we've been learning quite a bit about the whole battery market and the impact that nickel and cobalt have on that and the shortage of both metals over the last number of years. We did that stream back in 2018, and it's actually just kicked off here on January 1st this year. So some pretty fascinating developments sort of in the EV market overall and just in the demand for these battery metals.
Indeed, the nickel price has been going up pretty dramatically. We've been tracking it on the podcast on a weekly basis, and yeah, it's $8.19, so it's risen pretty dramatically. Jonna, turning back to you and your project, has it been hard for people to, in a sense, is it hard to get people to take seriously a low-grade nickel project? Like, what's your experience as far as trying to sell that project? Is it a hard thing to do? You need high grade for anybody to take it seriously?
Yeah. I mean, I think low grade nickel projects are definitely not the nickel industry norm. There's a couple that you can point to that are in production today, but they're not the norm, unlike say low grade copper projects. So, you know, I do definitely think that's been a challenge. I mean, I've been working on this for 10 years now. Most of that time has been spent in a down market nickel cycle. I mean, we haven't really had, you know, nickel price has gone up and down, but the investment side of the equation really has been absent in nickel. There hasn't, you know, you can't go out there and see, you know, a wave of people wanting to invest in nickel up until say the last year, where we're starting to, you know, see more news, more people, you know, you go on the news, you can Google nickel and people now know it's in batteries, which was, you know, a huge learning curve when we first started talking about nickel and batteries 2 years ago. I remember, you know, literally sitting down and explaining to the Quebec government that there's more than lithium and graphite in a lithium ion battery. So that, you know, that sort of education piece has definitely come along, and people now, with the exception of every so often you see an article that still only talks about cobalt and lithium, for the most part, you now see people talking about nickel and how, you know, generally what we've seen in the battery chemistry is the nickel continues to increase. But yeah, I mean, for sure, low grade, we have you know, Dumont has a 0.3% nickel deposit. So definitely it's on the lower end of things, no question about it. But when you look at the value per ton of value in 1 ton of ore and compare it against a copper porphyry in South America, it's on a very similar scale. And so if you can do it down in South America, let's look at Constancia, which has a 0.4% copper ore body, you know, and copper is what, $3.50 a pound, and compare that to Dumont at 0.3, where, you know, nickel's $8 a pound, you can start to see some similarities into dollars per ton, and just looking at it from that basis. And I think that as an industry, you know, we really need to get over the fact that, you know, historically a nickel mine is 1% to 2% nickel, and we go in and mine it. I just think it needs to be looked at from a very different mindset when you're comparing what Dumont could look like versus, say, a more traditional Sudbury, Thompson, Voisey's Bay nickel deposit.
Okay, very good. And to state the obvious in a sense, so for you, this is an economic deposit that you have, and it's in Quebec as well, right?
Yeah, so I mean, a little bit about Dumont, just for people who aren't aware, because I don't know how many people are actually aware of some of the details on Dumont. Dumont, it is in Quebec. It's located in the Abitibi region. It's about an hour north of Rouen or Val d'Or. So we're right in the middle of that sort of regional mining center within the Abitibi that has lots of experience building this scale of project. In terms of scale, we're looking at a two-phased approach. The first phase would produce about 33,000 tons of nickel annually, and then expanding by year 8 to produce 50,000 tons of nickel annually. So it is a big project. It's going to generate a lot of nickel, and Mark referenced that earlier in terms of scale. These are the sorts of projects that are going to start to answer that call from the electric vehicle manufacturers. Dumont has a proven and probable reserve of over 1 billion tons of ore with 2.8 million tons of contained nickel. In terms of where we are in the study, we completed the first feasibility on Dumont back in 2013. We updated that feasibility in 2019, in part to look at having a fresh study for this new, this wave of interest in nickel, knowing it was coming. And second, we looked at some different options around our tails and around what the sort of the downstream is going to look like. And then in that time period, we were also able to get both federally and provincially permitted, as well as we have an IBA signed with the local First Nation. So essentially, in terms of where we are, really at this point, it's about funding, and it's about being able to put together, the $1 billion to build the project.
Okay, great. And we're going to get into that a little later. This really what I find to be a super interesting issue, actually, this whole funding issue. Mark, would you like to also just sort of tell us a bit about your project? And I assume you also think this is an economic deposit. How big of an opportunity is your project? Oh, you're on mute. You're on mute.
Go-to meeting, it's down there. Yeah, hopefully by the end of this year, things I won't have to hear anymore. Yeah, John and I were joined at the hip at Dumont for 9 years. So, I know all too well the pain of trying to sell project. So we're basically on the same structure, about 200 miles west, just north of Timmins. So again, one of the big advantages of where both projects is we're sitting in the midst of all the infrastructure that you need. We're not in a remote location where you have to spend $1 billion to build the infrastructure to then spend $1 billion to build the mine. We've been able to, because of the experience with Dumont, we've been able to advance this project very quickly. So, we have 3 million tons contained nickel. We're advancing towards a PEA that'll be done by the end of this year. We just announced an MOU with Glencore to look at using the Kidd Creek to be able to start at a much smaller CapEx, much more quickly than going to the big project, which will be a massive de-risking. But the goal here is to have a feasibility study done by year end. It'll be similar scale, to Dumont, in terms of starting, somewhere around producing 30,000 tons of nickel and then ramping up, as large as the resource permits. The nice thing is it looks like, we have multiple deposits in the area. So, we have the potential to be ending up being a very, very large resource by the time we're done, and we'll hopefully figure out most of that by the end of this year.
And do you know what your price of nickel you need to basically be in business and to be doing well?
Well, so we're working with Inco, who did all our work on Dumont, to do the PEA and the feasibility study. Dumont has a $17,000 a ton nickel price. In the price assumptions, again, the metrics, it's, people think low grade must mean high cost, but it, really doesn't, using Dumont's feasibility study numbers, you're looking at just under $3 a pound for the initial phase of cash costs. All in sustaining cash costs, which is the number that actually matters because it's how much cash you have to put out over the life of the project. It's $3.80. There's no, there is no high underground sulfide mine in the world that comes close, except for maybe 1 or 2 mines in Sudbury and Russia, to that kind of all in sustaining cash cost. So, so again, we'll probably, will end up needing a similar price. And again, today at today's price of over $18,000 a ton, we'd be making, you know, even much more money, because the torque to each increment in nickel price on such a massive resource is pretty substantial.
Yeah.
And just a quick final. Sorry, go ahead, Jonah.
Yeah, just one question to Mark's point there, and I think it's important that people kind of skim over a little bit, is the impact of existing infrastructure. You know, people, when they look at capital costs and they say, oh, I'm comparing against this project, you know, when we have a, you know, and Mark's in exactly the same boat, we have an all-weather highway located 1 kilometer south of the pit. We have a rail line on the property that runs right along the road. We have electrical infrastructure that with enough power to power the entire project, less than 8 kilometers away from the project. So when we talk about infrastructure, you know, that's why these projects are not just interesting mineral occurrences. You know, it's because you've got all of that already in place. So your capital that you're talking to build the project is really focusing on what you need to get the ore out of the ground, to get the nickel out of the ore.
Okay, excellent. That is a crucial point. We're not in the Arctic Circle here, needing to build a all-weather road or whatever you'd call it. Wes, so when you hear all this, does this just scream opportunity to you, or how does your brain process this information?
Well, I was actually just looking up what other metals are in both deposits to answer that question. I figured it was coming. I mean, really, the way our model works is we stream the byproducts, right? So really, I noticed both of them look like they have at least some level of palladium in them, which would be something that we could stream. So that would be, we actually have a palladium stream on the Stillwater deposit down in Montana right now, and that kind of fits within our business model. And really, the way to look at it is if you are a base metal company, then generally once you actually get operating, I mean, right now I don't imagine your NAV ratio is all that great when you're in that kind of development stage. It's a bit rough as you go through, but as you get into kind of that operation stage, you can get it up to kind of a 0.7, 0.8, kind of in that range, and that's pretty good for an operating company. We, just to give you the ratio there, we trade at about, right now we're very high, we're about 2.1, 2.2 times our net asset value. So, and that's really because the risk associated with the costs to operate are not in our portfolio. So really, when you actually stream a product, like we have a set value that we pay for that. So it really removes that risk. So it allows investors to pay us more per ounce of precious metal than any other company would get. So that's where the real value add is that we can actually give you far more when you're financing that project than what you'll get from your investors, or really from a bank, or from pretty much anyone else, and just because of the nature of the value that's attributed by our investors to our portfolio. So I would say, yeah, I mean, I'd have to look at it in a fair bit more detail and see how much is of the metals actually there. But the great part about it as well is that this metal's coming out anyways, right? So it's not something that you're having to do any extra process for generally, or anything else. It just comes out in the concentrate, and that way you're getting some value for something that really most of the time the smelters would just be taking from you anyways. So you can actually have that as you go through, and I mean, there's lots of other ways to sort of look at it as well, but I would say, yeah, great opportunities when you see these types of projects, particularly the lower grade ones. I mean, you bring up Constancia, it's actually one of our partners in Hud Bay down there. I've been down to Constancia quite a number of times, and that is a remote place, and it's a very high elevation, very challenging environment. So I definitely take your point on having the infrastructure there, and that is incredibly important, because a lot of these South American mines, I mean, Slogo would be another great example. You're out in the middle of the Brazilian jungle there, so you have to bring everything in to actually operate these. And the copper mines have been able to do it for years. So as nickel becomes a more valuable commodity here, I certainly see the opportunity there.
Interesting. And a quick follow-up. So if I understand you right, is Wheaton Precious Metals sort of their bread and butter is the idea that they can take if there's platinum or palladium as a byproduct, you're happy to take that and we'll give you some money up front, and it's kind of that's, so I understand.
Exactly.
Okay, excellent. And just a quick, go ahead. Go ahead.
Yeah, so we give money up front, and then there's also a production payment, we call it, which is usually about 20% of spot. That's sort of standard in the business right now, that we would still pay you that kind of 20% of spot, which the idea of that is to kind of make up the pretty much what it costs to produce that ounce of metal as you go through. That's kind of the concept anyways. And it varies obviously depending on volume of the metal that's in there and all these things. But that's kind of the idea, is there's an upfront payment that we would make, and then we make a production payment per ounce of metal that you go through. Now we've got a whole bunch of models kind of around how we deal with early deposits as well. Normally we don't get into a project until it has usually a pre-fees on it, but we have a number of companies that we work with right now that are in that kind of more development stage and helping them with, and usually when you get the stamp of approval from Wheaton, it actually helps you with your investors. You can actually get that because we have quite a significant due diligence phase that we go through in that. So there's a number of different ways you can look at the value add that Wheaton can have to a project.
And just a very quick question before we get to Roberta, because I want her perspective on this, but just a quick follow-up, because these streaming companies, I think, are you seeing more pushback? Because we saw the thing with Sol Gold, I don't know if you followed that, and the Franco-Nevada deal, and I just see it, and I get the sense that there's a bit more of a pushback on this whole streaming model from the miners' side. Do you have anything to say on that? Or are you noticing that? Or I don't know if you have any comments on that, but.
We see it definitely, and I think the best way to look at it is streams don't work for every mining project. I mean, really, you can't. It has to be the right type of project with the right ratio of metals and the right environment to actually put a stream on a project. I mean, one of the things is I mean, when we invest in a project, we invest for life of mine. So that is definitely one of the criticisms that we often get, is that we're actually buying the exploration upside when we pay for that. And we have things, I mean, there's drop downs and those types of things that you can negotiate into a contract now. And I would say the streaming business has evolved significantly in the last probably even 5 years. I mean, the business itself, Wheaton actually really invented the concept of the stream back 16 years ago now, in 2004 on the San Dimas deposit, when we spun it out of Goldcorp. So streaming didn't exist before that. It was really royalties were the concept before, and then we determined that the stream was actually a more efficient way of accessing capital, both for the streamer and obviously for the mining company as well. So over the last 16 years, it's changed dramatically. And we have some of our older streams that we've renegotiated them multiple times to make sure that they are right sized for the projects, and particularly as some of these projects get later on in their life. Now, I can't speak as much for Franco or Royal. I mean, I'm obviously very familiar with their business models and what they do, but culturally, there's some differences in the way each one of these companies deals with partners. And that's something that Wheaton prides ourselves on, is we really look at companies we work with as partners and really try to work with them to make these projects better.
Yeah, and I guess to state the obvious, like if your company goes out of business that you're partnering with, that's bad for business. So
exactly. I mean, it's a very binary, and we don't have cost exposure, so there isn't really that. So, but if the mine isn't running, then we're not getting metal. So it really right. It's an interesting discussion. I have lots of those discussions with our partners. Believe me.
Okay. Thank you. Very interesting. Roberta, so I want to get you in on this. So when you hear about these nickel deposits in Ontario and Quebec, these are close to each other. What is your sort of thinking, again, what's going on in your brain when you, like, from the environmental sort of side and just from the consultancy side, what are your concerns or potential concerns that you could see that people have?
Well, I mean, one of the things that we've noticed, especially over the last 5 years in working with mining companies, is that they're fighting for investment dollars, really, right? So in new capital projects, there's only so much money to go around, and they're needing to figure out how to attract investors that maybe have concerns they didn't have 10, 15, 20 years ago. They're also competing with technology companies for investment, which might be more attractive to younger people getting into investments. So, but really what I see here is this great opportunity in time where these two sectors are converging now, right? So you get, you have this drive, this need for nickel from the technology sector, and mining is, absolutely necessary to provide that, unless you're going to go into a recycle model, which right now that costs more than mining new metal out of the ground. So I think that really it's interesting because these two sectors, one is generally, I would say, lagging in innovation. I mean, mining tends to be, as much as I'm, very pro innovation, I try to encourage it in all the projects I work on, at least in some element. Mining has been slow. Technology is on the other end, right? They're leading in innovation. So again, I think it's another opportunity for as tech companies start to get more interested in their supply chain and where these metals are coming from. Maybe there's opportunities there for partnerships, and if we make those partnerships and keep them in Canada and really control the supply chain and control the ethical sourcing of these minerals, I think really that's the opportunity here. Of course, there's going to be environmental and social challenges. I think mining has tended to have, obviously, not necessarily the best track record in terms of how it deals with communities, and we're still seeing tailings dam failures today, and I think that continues to make it difficult for mining companies to get buy-in and to get that investment money. So interesting thing about these deposits is the nature of the rock, which from what I understand is neutral rock. It's actually carbon sequestering rock. So that's a really cool story, and I'd like to, I'm fascinated and like to hear more about that and more about what that means in terms of calculating the carbon footprint and what time frame is that under, right? In terms of like, how do you compare the carbon footprint of one of these projects to the need to, create the footprint, right? So the boreal forest in northern Ontario and northern Quebec is one of the greatest carbon sinks on the planet. So there's this balance between extracting minerals, creating a big footprint, though that the tailings and waste rock being carbon sequestering, but how does that compare with not creating the footprint at all? But I think that's where we really need to consider that the economic benefits to the region, and can these projects create a regional shared value, and considering all the needs of the communities and the mining companies and the need to drive innovation. So I'm really fascinated about it. I'm excited about it. So, but I think there's a lot to consider.
It sure sounds like it. Yeah, I mean, Robert Friedland, I don't know if you saw the speech that he gave at the opening of AME BC. I read the article or summary that we had on the Northern Miner website. And yeah, he was saying how, there will no longer just be a price of gold or of nickel or of silver, that the kind of the environmental footprint, so to speak, and who knows, maybe almost like maybe the ethical side of it too, and just almost the ESG is going to kind of factor into your whole kind of how that nickel or metal is priced. Jonna, do you want to pick up on this? Like, tell us about this sequestration thing. Are you guys actually carbon neutral? Is that rare? Is that
I'm not going to put I'm not going to sign my name on carbon neutral quite yet. We're actually in the middle of doing a pretty complete life cycle assessment of the project to understand exactly what the footprint is, including not just our immediate, but also just our reagents that come in and the whole suite of how carbon footprint happens. But yeah, no, I mean our tails and our waste rocks sequester carbon, no question about it. In fact, we have in 2011, we actually started way back before this was like really cool. We found there were some researchers at Laval University doing work on carbon sequestration. I don't know if anybody's ever been to Thetford Mines, Quebec, but in Thetford Mines, Quebec, they have the asbestos tailings from the old asbestos mines, and it was a dry process, and they dry stack their tails and their waste. and it sits there. And actually, that's where we did most of our metallurgical development for Dumont in terms of all the test work. And so we go there quite regularly. And this stuff sits in these mountains, and it's cemented. And it's cemented in because of this carbonation reaction, where carbon dioxide in the air passively reacts with the brucite and other chemicals in the rock and forms carbonate that is a permanent sequestration in the rock, and it makes them like cement. And like, for example, there's dust that, winds that go through Thetford, you never see dust come off these things, right? Like you don't see airborne asbestos fibers in Thetford because these things are cemented. And so in about 2011, we took all the tails that we had produced from a mini pilot plant and a few other things, and we put them in a tailings impoundment on the Dumont property. And we also took a pile of waste rock, we blasted the outcrop on the property, and we put a pile of waste rock in another cell. And we had the PhD researchers come and put instruments all through these different piles. And we still have those instruments today. And it's been about 9 years. And we don't actively monitor them anymore. But definitely all that data has turned into 6 or 7 papers that talks about the ability of our material to sequester carbon. And so, yeah, for sure, it's a really interesting property. And one of the things we looked at with our tailings pond design that we revamped in 2019 with the assistance of wood was looking at how can we effectively store these to get more exposure to air to actually actively sequester more carbon. Because storing them underwater in a tailings pond kind of limits that ability. And because our tailings don't generate acid because they're net neutral, we don't have to worry about acid drainage and exposure to air. So we can take advantage of that benefit for sure. And in addition, that exposure to air, really that reaction really does cause cementation. And so you get a strength, which, depending on if schools go back and things like that, we have another potential research project on the book. So we'll look at what kind of strength can we expect from some of these tailings in terms of mechanical properties for engineering design.
That's interesting. And I was just looking at a question from the audience, and we're going to get to questions at the end, everybody, just so you know. But on that point, have you also thought about how you're going to develop the mine and using, say, battery-based mining machines and sort of like, have you thought about that, or is that just a bridge too far at this point?
No, I mean, we do have a complete feasibility study with the mine design. We're using 290-ton trucks. So, currently, I believe, actually, I was talking with Roberta today. I believe Anglo's testing a hydrogen-powered 290-ton truck in South Africa, potentially. Don't quote me on where, but I've seen a publication on that. But our trucks are diesel. However, what we did in the 2019 feasibility study is because we have relatively inexpensive hydropower and we have a lot of it, one of our goals is to electrify as much of the mine as possible. So we actually did put trolley in. So we've got trolley assist in the mine, which is on the 2 main ramps that go up to the waste rock dump. And that allowed us in the 2019 feasibility study to eliminate 30% of our diesel consumption.
Okay, excellent. So you're already thinking about it.
Oh, for sure. I mean, when you just talk about the project and you look at the footprint, I mean, the whole story around nickel and the whole story for battery producers and the end users, the really, the way to differentiate ourselves with projects like mine and Mark's is really around that sort of ESG spin and facts, compared to say Indonesia. Indonesia is going to supply nickel for the world for years and years.
Major nickel supplier.
No question about it. They have to. The nickel has to come from somewhere, but that is going to come at a carbon cost. No question about it.
Okay, Mark, would you like to weigh in on this? How's your project as far as this whole carbon neutral thing and carbon sequestration? How's your project? I assume it's similar.
Oh, no, again, yeah, I mean, these deposits are very similar in a lot of ways. So, and I'm very confident about getting to zero. We trademarked the terms net zero nickel and net zero cobalt and net zero iron because I think we will get there by the time we get our feasibility study done.
Yeah. I enjoyed that press release, Mark.
There you go. So, no, I mean, at the end of the day, like nickel's dirty secret is that, more than 100% of the supply growth has come from Indonesia. And as Jonna was just saying, to make nickel pig iron, they burn 25 to 30 tons of coal to make 1 ton of nickel, which generates nearly 90 tons of CO2 for every ton of nickel that gets produced. Even HPAL over there, because all the power comes from coal-fired power plants, you know, is still 35 tons of CO2 per ton of nickel. So, you know, if we can get to zero or very, very close to zero, you know, that's a massive benefit, which, you know, not just the EVs, you know, the example I use is, you know, we look back now, you know, 40 years ago, and Inco used to spew 4 million tons of SO2 a year, and Falconbridge spewed another big chunk, and you know, a river that close to your plant, you know, not saying Inco, Falconbridge did this, but a lot of industrial sites, that was great because you just stuck a pipe in there and the river took all your, you know, your waste away, you know, and we're horrified about that, you know. But the thing is, you know, there is a generation that's coming through now that sees CO2 as horrific, you know, as that looked to us, you know, 20 years ago. So, you know, the CO2 footprint of your projects is going to be very, very important. So that, you know, I think is a critical differentiator for our projects and sulfides in general versus, versus ladders. And again, as part of this huge opportunity, like if you draw a big circle, you know, between, you know, the Abitibi and Sudbury, you know, that's one of the few places in the world where you have a lot of nickel. You've got a lot of processing capacity. Unfortunately, it's split between half a dozen different companies. But, you know, again, if we could, and a couple provinces, you know, if we could get our act together here, again, you know, it's Elon Musk time here. So, you know, we can't study it for 5 years. We need to, you know, get going and get there. And there's an opportunity to be had if we can get our, you know, S blank blank together. So.
Right, and very quickly, time flies here. So and if Friedland's right, that means this adds value to your projects, to state the obvious. Now, and so you're saying there's smelters in the area, right? Like Vale and Glencore both have smelters, but it's not that simple, right? Like, isn't there? I don't know if it was magnesium. What was the issue? Is there an issue, or is it just simple? Like, tell us about the dynamics there. Like, should you guys be? You have why don't you build your own smelter, or does that not make sense at all? What's the dynamic with the surrounding smelters?
There was underutilized smelter capacity in Sudbury, and we need some processing capacity. And again, there's different paths. Our material, you know, one of the things we did was, you know, just roasting it, and then you can then melt it and use it for stainless steel. So, you know, again, it would be great to do that as part of a processing complex that already has roasters and so on, and acid plants already in place. So, MGO for certain types of furnaces is not great, but other types of furnaces is not an issue. So, and you know, again, we can produce products that work, and you know, it's just a matter of getting the mix right. So, again, the opportunity is there. We just have to get it figured out.
Okay, excellent. Thank you. And we can always come back to that. Now, Wes, we have a question from, I don't know if it's Colin or someone in the audience, and it was exactly the question I was going to ask you, which is, how much does ESG weigh into your guys' decisions when you're looking at a project?
It's becoming more and more significant, I would say. I mean, we're similar to the rest of the industry where I mean, it's been a factor there for us over the years, but not as much as it's become in the last few. I mean, we put out our sort of first sustainability report last year, which is a kind of interesting to do when you don't actually operate the mines. It's an interesting exercise, and a lot of investment has gone into things like benchmarking and how do we actually evaluate, and it is a significant part of our risk matrix now in how we value projects is how do those ESG factors actually tie in. And I mean, there's so many different ratings agencies out there now, and how do you tie into these different ways of looking at things? So we focused primarily, I would say, on Max kind of towards sustainable mining. On the World Gold Council has got some really good stuff in there. UN actually has some really good stuff that you can actually rely on, and we're actually building our own kind of, I guess, evaluation matrix that we'll use both on our operating assets and then likely on any new assets that we look at going forward. So, I mean, the other one that just in this discussion has been interesting is this concept of provenance and where the metal is actually coming from. And we've been very focused on that on the cobalt side, because I mean, certainly where Indonesia is the nickel, and it's the Congo is cobalt. So it'd be almost even worse, really, at the end of the day for different reasons. But I would absolutely agree. We certainly have seen it on the gold side as well. I mean, it was successfully implemented in diamonds a number of years ago, although that's less relevant now than it has been, certainly. But certainly on the gold side, it is becoming something more. And I certainly agree with what Friedland said there, that I think it's going to be something that not only on kind of the equity investors side, which is really where you're seeing the pressure from right now, I think, and this concept of ESG funds, and I mean, that's been one of the big reasons that we've really focused on it. Is that, I mean, the largest growing sector in the investment business now is these ESG funds, and if you can actually get into that side of the investment market, there's a lot of money in that's looking to be placed, and mining traditionally is not a great kind of candidate for that, but I think we certainly can be. I mean, we've got this ability as an industry to innovate and to come up with new ways of doing things, and a lot of it is partnering with these technology companies. I mean, you look at the advent of, I mean, battery powered equipment for underground is certainly coming along very, very quickly right now. So, and I certainly agree with the Jota that it's the 290-ton truck is not getting fully battery powered anytime soon. That's not going to happen. But at the same time, I mean, those trucks are running on electric motors and have been running on electric motors for years. So they actually aren't as bad as, I mean, you're not running a mechanical truck on that. Well, not all of them are anyways. There's still a few that are running that way, but most of them are running on large electric motors now. And there's a lot of technology that's been developed for those trucks that can be taken into other parts of the industry. I mean, certainly the regeneration that goes back into those. You look at the battery packs that are actually sitting on the deck of those trucks now. It is a really impressive piece of technology in of itself. So the industry has lots of potential to continue to grow in this area, and I think change our image. I mean, the image of a miner is still the underground coal miner, right? I mean, that's something that we've fought against for years, but it's still the guy down there with the headlamp and the pickaxe. And I think we've got an opportunity as an industry to really change that view of who we are and what we are, as we're an essential part of any of these green industries. I mean, whether it be nickel or copper or cobalt or any of these, none of these green industries work without having the base materials to actually drive into them. So I think it's an exciting time to actually be able to evolve into this as an industry as we go, and to pick new partners basically as we kind of go through this next phase.
Yeah, I mean, ultimately ESG has, like, there's a value. Like, I mean, if Friedland's right, there's a kind of a price tag you can start to attribute to it. This is more than just being a do-gooder at this point. Roberta, do you interface with investors at all, or
we spend around the ESG finance piece. We do spend some time doing that type of work, and really making sure that these metrics, say these aspects of projects that have historically been maybe not measured or difficult to measure, that we translate sort of those into quantitative values, so that there can be a reasonable assessment of project to project, right, or company to company, because there are so many standards out there now. There's I think one probably comes online almost every week. So I think it's really important for these types of projects that and between the tech sector and the mining sector, they align on, okay, what standards are we going to use, how are we going to compare ourselves to each other, and projects like these deposits where there could be synergies, right? You really want to take advantage of that in terms of evaluating the ESG aspects of the projects, and be able to explain that and articulate that to your investors. So yeah, it's a big part of our business for sure.
It's very interesting. So part of your work then is to help determine the metrics to measure these kind of things. And as you said, like, there's kind of to quantify, which is kind of sounds elementary, but it's probably not as simple as it sounds.
It's not as simple as it sounds, that's for sure. So I mean, first of all, you have to decide on which standards you're going to be assessing against, and there's some some great global standards. There's, you know, the Mining Association of Canada, obviously. There's Towards Sustainable Mining Framework is great. There's a new IRMA, the Initiative for Responsible Mining. So those tend to be the typical standards, but it's really about digging in farther into these projects and understanding, you know, where the value is and what they're doing around ESG. I mean, calculating carbon and carbon sequestration and GHG emissions is evolved, right? You have to be very careful and make sure that when you're seeing press releases from companies and they're, you know, providing that information, what are they really measuring there? So you want to make sure that you're basically getting reliable information about the whole supply chain and the life cycle of a project. So I'm sure that Wes, you must look at that for your projects that you're thinking about investing in. And we do a lot of due diligence work at ERM. We basically, you know, assess projects and either both on the acquisition side and the sales side. So it's a big factor.
And would you call what you do sort of like an audit of sorts, or not?
Yeah, we do a lot of auditing to make sure that companies are basically following the things that they say they are, you know, as they're in operations, but also in terms of new projects and making sure that those projects are meeting the requirements, and if they're making commitments to ESG, that they're actually following those. I will say that when I have to mention mine closure, because that's my job. I work on closure though at the beginning of projects. That's my favorite place to work on mine closure because of the fact that the greatest opportunity at the beginning of the project to integrate the future use of the land into the life story of the mine, right? And I think that's another place where projects can really make some substantial improvements in terms of thinking about mining as a temporary use of the land and really focusing on the future and the value that could remain from that infrastructure they're creating and research opportunities and other economic benefits to the community. So, but I will say closure is often not calculated. The true cost of closure is not calculated and is not considered properly in new projects. And so that's one thing I just encourage people to look for is how companies have costed closure in their value of their project.
You know, it's funny you mentioned that. I'm hearing that more and more as well, as just this idea of it's kind of like an exciting new area is mine closure and how we deal with mine closure, closing a mine. But it kind of makes sense. I mean, you make this kind of, mining is an extractive industry. You're kind of making a bit of a mess. You know, it may be one of the most important factors in terms of the legacy you leave in that area. Okay, so there's another topic I want to touch on before we get to the audience, which is the government's role here in terms of fostering these projects, because we saw them recently with First Cobalt in Ontario give, it was $5 million from the federal government to get this refinery running, and then $5 million from the provincial government, if memory serves, which seemed like, you know, when you consider it in the context of their budgets, it's nothing. But when you consider the opportunity for Canada, particularly as you were saying, Jonna, about this kind of big EV opportunity, and Mark as well, this kind of Elon Musk and we got to act now. What do you need from the government to act now? Do you need anything? Like what would you like? What can your representative do for you?
Well, no,
I'm drinking a lot of coffee here.
Yeah. I mean, other than $1 billion, you know, there's the number, but no, that's not happening. No, I mean, the Quebec government has been extremely supportive. The Quebec government was initially, you know, back when Dumont was owned by Royal Nickel, they were on the IPO. They are supportive of the project, no question about it, and they continue to be supportive of the project. I think that's one thing I just want to say. I don't know where.
What does that mean, though? Supportive, like they're helpful with paperwork?
Financially supportive. Financially supportive in several different ways. I guess one was we have a royalty on the project. So at one point we took a royalty with them with IQ, Investissement Quebec. which helped us out back in 2012, Mark. Yeah, 12, 13. And then since then, they've also helped us out just with some test work. They have lots of different programs as part of the Quebec government, and we've been able to take advantage of that to be able to sort of advance some test work along the way. So that's been helpful as well. In addition, of course, permitting, and we are fully permitted both provincially and federally. And we work very closely with the government to make sure that we keep them up to date about where we are. They are a stakeholder in the project.
Exactly. You're talking about the provincial government, right?
Yes, provincial government. Yeah, because they are stakeholders, and we keep them updated. We work with them. With the 2019 feasibility study that we did, there were some changes that we needed to, so we are looking at modifications with our C of A that was issued, which is sort of the main permit in Quebec. And so, we work through that process with them.
Okay, excellent. And just finally, I guess everybody would like free money, but is there stuff you'd like more from them despite the good results so far? Would you like them to be doing more? Would you like a $10 million loan? Like, is that the kind of thing that would really help you achieve this? Because it sounds to me, it sounds to me like you guys are saying there's a window of opportunity here. And this window could close if we don't act fast. So is that what you need? Like, what do you need in order to take advantage so that Sudbury and everybody can get the most out of this? What do you need? Could you use more from them?
At this point, we're very happy with what the government has provided to date in terms of the project. I don't think, at this point, we need the investment community to really decide, does it want nickel? Does it want more nickel? And is it willing to support that? The government can't force investment. Private. It's one of those roles. For example, I don't know. I look back to things like rare earths, where there's been a lot of work on rare earths. There's been a lot of development work on rare earths, especially at the federal level. And yet, these projects which have had huge amounts of money funneled into research and development, you're not seeing any take up by industry. Nobody's building a rare earths project in Canada. So I think, we need the right market conditions, which I think we have. We're looking at a future deficit coming. We're looking at higher prices. We've seen higher prices to date. I think, we need that climate to develop these projects. I think the government needs to have clear permitting guidelines. I think they need to have, all of that in place. I don't necessarily think they need to artificially create a market for us. I don't think that's their definition.
Like, I'm a pretty free market guy, but what I really thought was interesting about the First Cobalt situation is the result of, because it's just kind of a small loan. They needed something, First Cobalt needed something like $60 or $70 million to do their thing. But what the CEO, I think Trent Mell, was saying was, with that $10 million, I can now go to the investment community and say, hey, the government wants us to succeed. This is not some, pie in the sky, hopeful sales pitch. This is like real. We have the federal. And for him, he was saying, not only will I get, better deals if I need a loan, but I'll probably get more interest. And say, me, if I was to invest, I'd feel a little bit better if I knew, okay, the government of Canada wants this to work, right? So that's a whole dynamic that, right?
Yeah, no, there's I would say,
Mark, go ahead.
No, there's a symbolic level of financing, which again, I think that's sort of, it's helpful. It's an endorsement, and then the second piece, the car plant's, got $250 million, on the other side of things. So, and again, in terms of jobs and value added, I'd probably argue that each of our projects will add more to the economy than auto assembly.
Like you're not saying you need the money for this project to survive, and I don't want to suggest that.
No.
But I'm just saying, but if we look at the rare earths example, half the reason the rare earths left, actually maybe the full reason the rare earths left North America was because we just said, okay, let the market decide, and then China puts in their cheap rare earths and undercuts everybody, and then all our rare earth processing is gone. That's what I'm getting at.
Yeah. Oh no, that's and there is a risk. Again, I don't think the auto industry is going to depend on China and Indonesia for that. So, there is some opportunity there, but that's definitely there. And again, at the end of the day, it's about competition for investment dollars from global investors. So, if the Indonesian government and they do provide a pretty comprehensive package for the Chinese NPI plants that are going there, if I'm going to invest a similar quantum of capital, I just need a competitive tax incentive structure to other jurisdictions, which is what they're doing with the auto sector. I mean, unfortunately, that whole, the auto industry's got pretty good at sucking out capital from various competing government jurisdictions.
Right.
But I just need to be on the same level playing field with all the other jurisdictions around in terms of various incentives, various tax incentives. And again, the other opportunity here is we have so much hydroelectric power in northern Quebec and northern Ontario, that again can underpin a zero carbon, low carbon economy, and it would be great to use that for that purpose. So
right. So in a sense, what you're saying is give me conditions where I can win, and I can run with that.
Yeah.
Is that right?
Yep. Exactly. That's exactly.
Okay. And then you still feel like you can meet these, because it sounds like we want an aggressive program. We have an aggressive program here to get these low-grade nickel operations into working, because if you take 5 or 10 years, maybe you're not going to have that same opportunity. What do you think about that, Mark?
Oh, for sure. And the part, that's in the industry structurally right now is that you don't have one of the major mining companies where nickel moves the needle for them. It's sort of too small a pie for them to really focus in on it as a core part of their business. And so, as a result, again, I'm not going to, I was with Inco, hopefully trying to create an Inco Falconbridge merger back in 05-06, which didn't happen, and again, you look where the capital investment's gone, over that 15-year time frame. So, yeah, I mean, the opportunity is there. As I said, unfortunately, it's split among a bunch of parties, and unless somebody steps up to help consolidate the sector, provide the impetus to make it happen, it's sadly, not going to happen. So,
so just to rephrase my question then, so what do you need then to achieve your goal?
I just need basically the same set of sort of goodies that every other jurisdiction is providing to nickel projects of comparable scale.
Are you guys looking for investors?
Give me my permits as quickly as I can get them. That's it.
So do you have everything you need to go?
Oh, I need lots of cash, but if they provide
you need cash
incentives, then
you need investors.
Tell everybody they'll give me my permits, then that'll make it much easier to get them forward.
Yeah, so there's a few things at work here.
Yeah.
Okay,
yeah,
perfect.
For sure.
I'm going to jump into the Q&A here because we have 20 minutes.
Just before you go there,
oh, sorry, would you like to go ahead, Wes? Do you want to chime in?
I just want to add one thing in there that I think is an interesting success model that we've had in Canada as far as government participation is the idea of flow through and how that has really helped the exploration industry and that side of it. I think that if you looked at that as a success story and moving that to the next level of looking how do we develop more mining projects in Canada, that could be used as an example of how do we get dollars in there. So it's basically providing tax incentives to your investment.
Yeah, for sure.
Right. So in a sense, nobody wants too much government involvement. That's hilarious. At least that's my sort of read. And maybe that's all the better. I think it's all the healthier if you don't need it. My only sort of thing is I just don't want to see projects not get developed because we're saying, let's just leave it purely to the market. And then all of a sudden, things get sold off and then we're just
the government can help get the market in there. Yeah. If you let the government help get the market in, I think that's the key. There is ways they can do it without being directly involved because you don't want the bureaucracy of the government in there. I think that's the challenge.
Like, exactly. It's a two-sided sword, right?
Yeah.
Sure. Fair enough. Okay, I'm going to jump into some of these questions here. Roberta, do you liaise with communities on behalf of mining companies? If so, do you hear more about social concerns or environmental concerns?
Yes, well, we definitely do as part of our business. That's a big part of the support that we provide to mining companies. In terms of what we hear more about, I think in the past, it was a lot of focus on environmental issues, but it has increasingly shifted. And I would say it's almost balanced now in terms of social performance and developing, meaningful and resilient relationships with communities, whether those be Indigenous communities or a local municipality. If you're lucky enough to have your mining operation or project be close to a municipal area, but you always still have Indigenous communities to consider. And so I think there's been a greater and greater focus on how can these massive capital projects create shared value. And that can't, for the mining company, for the communities, and for the government, really. I mean, they're going to make money off the projects as well over time, right? So I would say there's probably equal focus at least, and it depends maybe on the life of your project and your particular area where you're operating. I find that projects in Sudbury that people are used to mining, so there are maybe not as many concerns. And there are concerns on the environmental side, but people are kind of used to it and educated. But if you go into a completely greenfield situation in a pristine far north environment, then you're dealing with a different situation, and you need to be aware of that. So, and I would just on Mark's point there around getting permits and approvals, I think that's one area for sure where the government could, streamline or at least just make more consistent application of their legislation to mining companies. It can get a bit tricky, and it can be a huge risk to your project to achieve that on time. So something to consider, and the relationships you have with communities and how you bring them into your projects really impacts the permitting timeline as well. So.
And quick thing, just quick follow-up and briefly possibly, do you also try and create metrics with the social? Like, do you try and somehow quantify that, or is that just more of you write an essay really about what's going on?
No, absolutely try to, create metrics around commitments that companies are making. If there's a development that occurs, an economic opportunity for an Indigenous community, track and measure that over time. Yeah, sure.
Sure. Okay, excellent. We have another question. Hi, Mark. Hi, Jonna. Any interest from the Aussies you care to comment on? It seems they have rediscovered nickel projects in Canada lately, and from my memory, generally are ahead of us seeing booms.
Hey, Korzak.
John Korzak.
Sorry, that person we know.
Was that a planted question?
No. Yeah, I mean, you saw the press release a couple of days ago by Orford Mining, where the Aussie group was Wailu, I think that's pronounced, took an option on West Raglan, as owned by Orford. So yeah, that's good to see. I can't say I've had any recent discussions with Australians, but for sure, I mean, I think they tend to look ahead. I think they also tend to like high grade stuff. I think they need to get their head around that. But they have Mount Keith operating in their backyard, and that's very similar to both of these deposits. So I think at some point, we're starting to see that.
Yeah, I would say definitely the Aussie investment community is always been, well, because they've had more ways to invest for a long time, are still very keen on nickel. I may or may not have a call in 2 hours and 15 minutes from now with Australia. On the mining company front, no, to Jonna's point, what most of the sectors had in Australia is small, high grade operations. So that's kind of what they know. On the flip side, though, BHP Billiton's actually quietly, scooped, had a real focus on large low grade in Australia. So they picked up Honeymoon Well last May. They put Yakabindi into production on the heels of Mount Keith winding down, which is the grandparent of this class of deposits. So the BHPs of the world definitely are okay with large low grade down to a number. And again, it's up to us, and again, it's great to have forums like this to be able to educate people, about the benefits of these types of deposits.
And we have a question actually related directly to this issue. Both projects will realize a low nickel recovery of 50%. Is there any research to liberating and recovering more nickel? Mark, do you want to take that?
Or I'll let John. John is he's actually really good at that. So
okay.
Yeah. Hi, Sam. Yeah, no, I mean, for sure. So with these deposits, and this is very typical of all the ultramafic deposits, nickel comes in many forms. We have nickel in recoverable forms, which is typical like pentlandite, hazelwoodite, awarite, and those are forms that we can physically recover in the mill and put into a concentrate. And then there's a portion of the nickel that is stuck in the silicates. And so this is nickel that hasn't moved, if you want to, on a mineralogical scale, out of the serpentine and into something that you can either float or magnetically separate or something along those lines. And that is just a fundamental challenge for any of these ultramafic ore bodies. Vale owns some up in the Thompson area that have a similar challenge. They are a bit higher grade and have slightly higher recovery for sure, but it is a fundamental challenge. And in terms of research, we're always looking at ways we can tweak our recovery and do small things on small streams to get a little bit more, and we'll continue to work on that. I kind of think at some point somebody's going to be able to figure out how to get, nickel and silicates. If you're a laterite where you're 1%, they just melt it all, right? And so that's how laterites work. Laterite is a serpentine, but it's 1% nickel or 2% nickel, and you can afford to either melt it or you can afford to leach it. 0.3, not exactly the same economics. So those are kind of out as options. But I sort of think at some point, leaching comes along, bugs come along, people look at new things. And at some point, somebody will figure out that, there's a big ultramafic pile of waste sitting here and we're seeing some nickel come out the bottom, and somebody will figure out exactly how that nickel's coming out. And maybe there's a way to get that nickel out of the serpentine through, I don't know if it's bugs or something along those lines, but I kind of feel like eventually somebody will get there. We're looking at a few different leaching. There's a couple of different techniques, but that is sort of the holy grail of ultramafic nickel processing, is really trying to get that nickel that's contained in the serpentine, which can't currently be recovered economically at 0.3% nickel by flotation, gravity, or magnetic separation.
And by bugs, did you mean insects?
No, I mean like bacteria. I still think at some point,
yeah, but like living organisms,
piles and potentially maybe there's something you could, they've done it on sulfides. The issue with our deposits is they don't have a lot of sulfides. So, in the winter bugs freeze and they like to chew up the pyrrhotite, and then they create a lot of heat for themselves and they chew up the nickel as part of that. If you look at Terrafame, Talvivaara in Finland, they use bugs, but they have a lot of sulfur. Ours don't have a lot of sulfur, and it has a lot of magnesium, which tends to be relatively poisonous to these bugs. But maybe there's a different type of bug. I don't know. I'm just like, that's total blue sky fundamental stuff. But that's sort of it is a huge confront and just a real reality of our projects. But that, we've done a huge amount of mineralogy and a huge amount of metallurgy to make sure that we understand the variability of that recoverable mineral within our deposits, how they recover to concentrate. And so, that's been an important piece for us to really understand the deposits. These deposits, and I would argue that any nickel deposit or any copper deposit, you can't just do one big bulk sample, take the recovery and throw it onto the entire thing. There's lots of variability within every deposit. And we've spent a lot of time and money over, 10, 13 years to really understand how those vary.
Okay, excellent. So bacteria.
Yeah, I don't know.
The answer is yes.
Out there, somebody else at some point. But
it's great. Yeah. I'm with you. The genomics technology will be I think is part of the future of mining. So yeah, we've done a few projects where we looked at the opportunities around bioleaching and basically using the bacteria to get metals out of the rock faster. So yeah.
And I think an important point.
The famous investor was mentioning genomics as one of the great sort of investment opportunities coming ahead of us. Go ahead.
Yeah. No, and I think one piece that is important though is looking at how to utilize as much of the resource as possible. So one of the things, I think that it is an ESG thing. I mean, there is an argument to be said, you need to make as much as you can out of what you've been given. So one of the things that both Crawford and Dumont have is magnetite. And so that magnetite is present in the ore. Dumont has about 4% magnetite, Crawford's is a bit higher. And we can actually recover that magnetite into an iron product. We don't include it in our base case. It's not something, it is an option to add at the end of the day. But we do have a stream in the mill that contains somewhere in the order of 45 to 60% iron that you could upgrade just a little bit more and create an iron concentrate. So I think that is one thing when you look at these deposits, there are some different products that come out, and I think we should be looking at that. You should look at how do you use the whole, how do you make an economic case for everything? And that magnetite piece could be something in the right iron ore prices. That could be something you could add that could add value.
And we got a really interesting question from the audience here. How does a mid-career mining person get involved in this type of exciting project?
Well, I mean, so my background is obviously I was a mineral processing engineer, and I'd worked for Inco and Vale for 10 years. And I had worked for a while for Tyler Mitchelson. So many people might remember him. He used to run the strategic planning group at Inco, and he left and joined a startup, Royal Nickel. And after about 9 months of convincing, I decided to take a plunge and join them. And I think it's just about being, you have to be willing to be a bit of an entrepreneur. You have to be willing to not necessarily know where your next paycheck is coming from. There were some pretty skinny days at Royal Nickel. Like, we've got stories, Mark and I. Junior mining is not for the weak at heart.
I wonder though if the person was asking how they could be involved. I could be wrong in my interpretation.
Yeah, but, and in terms of we work with engineering firms. Currently, we work. Right now we have a very small team. We're pretty much done.
Are you guys hiring? Is anybody hiring here? Or
we're not hiring right this minute. If we get some traction to go into detailed engineering here, we would be hiring for sure. We'll be looking at a full suite of engineering and geology positions. Absolutely. But yeah, right now we've got a team of about 8 people. Most of our teams are based up in Amos, Quebec at the deposit. We do quite a bit of sort of maintenance work on the deposit and continuing to maintain the asset. And we have 2 of us here in Sudbury. If we go into detailed engineering, and that would mean we get some significant funding and have sort of a line of sight on the $1 billion it would take to build this, that's our sort of our next when we'd be hiring.
Mark?
I definitely agree with Joe on that.
Sorry, Wes, go ahead.
Was kind of 10 years with working for operating companies and then went into the junior side. But you have to have a stomach for risk, certainly. That's certainly a big part of it is that it's fun. I mean, if you enjoy that part of it and you can build your life around it, then it can be an incredibly rewarding career. But there's not a lot of early on career jobs in the junior industry, I think, because most of those types of jobs are done by consultants, really. That it's once you get to kind of that tenure point, then, but it's all about kind of right place, right time, and who kind of, and networking and understanding kind of how that all works, and finding a group that you work well with and that you trust. I think that's certainly been, that was my experience through it. And I mean, I had a great time. I mean, 10 years in the junior business was a lot of fun. I mean, I got to build Mount Milligan in BC, and then we did the Back River project up in Nunavut as well. So I mean, getting to work on 2 mines basically, that it was really a pretty cool opportunity, and something you don't see working for a major company either. You get to be kind of that jack of all trades and do all sorts of different things that you don't always get access to in other areas of the
and how did you find that opportunity? Just through getting to know people?
Yeah, just through getting to know people. I was working for Placer Dome at the time, and really it was when Placer got bought out by Barrick. The whole kind of Placer alumni, very few of them moved to Toronto. They all stayed in Vancouver and split off into all sorts of different companies. And honestly, the Placer alumni is still very alive and well in Vancouver. And there's still kind of alumni, well, not lunches anymore, but there were up until the last year anyways. But it is finding that network of people that you get along well with, and as I said, you trust, and then build that reputation for just doing good work, and then opportunities come along. I mean, it's the same way I got into Wheaton was really it was through kind of again just my network and people that I knew. So it's building that network is an essential part of any career for sure.
Yeah, leave the house.
Well, and participate in things. Like I'm, like coming to things like this. Granted, it's virtual right now, but I'm pretty active in the Canadian Mineral Processors on that side of things. I was chair. I'm on the board now. You know, and I've been going to those Canadian mineral processors since I was a student in 1997. And the same people I met back in 1997, I still have drinks with now. And so I think that's important. I think use these sort of CIM sponsored, use these connections to meet people and to really just expand. Because once you meet people, you just keep more and more, meeting more and more people and expanding your network. And that's really how you get opportunities, I think.
I think universities are another great way to do it. I mean, I've sat on the industry advisory committee at UBC for quite a number of years, and a lot of this stuff around the bugs and that is one of the really cool things that we've been sort of pushing for the last number of years is this collaboration between biology departments and looking at things like nanotechnology. And I mean, there's so many different areas that can be integrated in with mining as you go through. And where these things start quite often are at universities where you've got people that are able to raise the research dollars to go out and look at these crazy ideas that really aren't so crazy when you start going through it. And as Mark's referred to a number of times here, this idea of Elon Musk time is very, very real now. I mean, these things are getting accelerated to a level that we've never seen before. So getting the opportunity to get in with different groups, and I would just encourage everybody to go to expand outside of your industry as well and go and talk to people that are in all these other places. I mean, I've had great discussions with people that are in, I mean, whether it be other industries or in the arts or all sorts of things. And that's where you get these creative ideas on how you actually do these new innovative things. So it's not necessarily all going to come from a tight group. Expanding that network out as much as you can is incredibly important.
And quick yes or no question, our last question from the audience. I heard Elon Musk approached Vale to secure nickel, Wes. Has he approached Wheaton to secure any metals?
They have, yes, along with quite a few other OEMs. It's been some interesting discussions.
Well, I'm glad I got that question. Wow. Well, I think
the funnier discussions when we, like 2 years ago, when people first started talking about this and OEMs first started coming in, they're like, okay, you make nickel. We need nickel sulfate. You make no, we make a nickel sulfide. Let's talk about what we need to do to get it to nickel sulfate or whatever form of nickel you want. And literally, like, people at one point about a year ago or year and a half, 18 months ago, 2 years ago, you know, I think some people were just calling up like CRU, which is sort of a, you know, nickel expert, industry expert, saying, you know, give me the top 5 largest nickel deposits, I'm going to call them. And that's the kind of calls we get, right? So there's been a huge education piece in terms of what nickel do we make, in what form, what can you do with it, where can it go? It's been a huge piece because, I mean, the battery side of things, you know, they're learning just as much about our side of the industry as we are about them.
Yeah. The other thing I found with a lot of those discussions was explaining to them how the mining industry works, because they're saying we want exactly this amount of nickel or cobalt or whatever it is, and it has to be delivered at exactly this. It's like, it's not really the way mining works. So there's some variability in what we do and the way we do it, and a lot of them, particularly on the cobalt side, was they want to take advantage of the fact that the cobalt price is so low. Like, well, we want to go and lock in the cobalt price at $12. Like, well, that's not going to happen. That's not the way that this business works at all. So it's an education, certainly.
There's been a lot of, like, you know, there's been a lot of sort of, well, how much does it cost you to make it? We'll pay 25% more. I'm like, it's not a widget. No. Nickel is a publicly traded commodity.
You know. See, Colin, how are we doing for time? Is everything, how are we doing?
I mean, it is such a shame because I feel like everyone here could just speak all night about this. I can see the energy sort of even picking up, or maybe even sneaking the beer or wine glass without us knowing. But you know, that's typically where we'd be if we were in person right now, is heading out for a beer in the lounge to catch up for the next hour. So yeah, I mean, we did say 6 o'clock. I won't stop you, I guess, is what I'm trying to say. But
I think it was perfect. I think we kind of touched everything. I think it's a perfect kind of time. Stop while it's great. You know, like I think it was. I found it a super interesting discussion. You know, geology and like low grade nickel deposit. It's not that easy to make interesting, and I think we did a pretty good job. That was a pretty interesting discussion.
Yeah.
No, that was good. That was great. And hopefully we will be able to have a glass of wine in person sooner than later. So.
Okay, great. Well, thanks everyone. Colin, I'll let you sort of sign everything off or whatever. But thanks to all the panelists for coming. I thought it was really interesting.
Thank you.
Agreed.
Thank you.
That was a lot of fun. No, thank you.
That was fun. Thank you.
Good.
Really, and on behalf of the Sudbury CIM, again, a big heartfelt welcome from all of you for taking time in your busy days. It's not easy, but this is greatly appreciated. We got to keep these kinds of routines up through this time so that when this is back to normal, then we'll all still know each other and just be back in that face-to-face rather than pixelated. So yeah, thanks again. And in particular, Mark, I don't know if you've written the check yet or signed it, but thanks to,
I think we have. So
I didn't check with the treasurer yet, so but I'll get on that right away. But again, big thanks to Canada Nickel for helping sponsor tonight's event and keeping the Sudbury CIM afloat. And yeah, I look forward to seeing you all again, either digitally or in person. And yeah, good. Big thanks again, and enjoy your evenings. And yeah, keep digging.
there you go.
All right, bye
Good night,
everyone.
everyone.
Thanks, everyone.